Hey there! I'm Ava, the Atomic Blonde. In this strategy, we are going to use value gaps in the market to give us entries into some great trades. Let's take a look. So the first thing we need to do is to go to the indicator tab at the top of the screen and in the search box type Gaps Trend. You will see the indicator by Chart Prime. Click on it to add it to your chart. Then, type in EMA into the search box and click on the exponential moving average to also add it to your chart. Make sure you do this twice as we need two different moving averages. Now go to the Gaps Trend settings and uncheck the trailing stop loss. Now go to the first moving average settings and change the length to 75 and change the color to something you can easily see. Next, go to the second moving average settings and change the length to 125 and change the color to something different than the first moving average. I also like mine a bit thicker, so go ahead and make it as thick as you like. The first moving average will act as a stop loss, whilst the second moving average will act as a filter. Now let's look at a long setup. Here, a fair value gap appeared on the chart as price rose strongly in the previous candle. This is our entry signal. We can buy the open of the next candle and set our initial stop just below the low of the candle that created the fair value gap. Then we measure out the 1-to-1 risk move to the high side of the entry. Here we reach the 1-to-1 risk move. Now we need to consider where the moving average is located. It is still below our original stop, so we will keep using our original stop until the moving average is higher than the original stop. Once that happens, we can revert to using the moving average as the trailing stop. We can also now set a new profit target at 3 times the original stop distance. Go ahead and mark that off on the chart. Now we wait to see if our profit target or stop gets hit first. The moving average is still below our original stop, so we will keep the original stop until the moving average is above that level. Now let's see how the trade plays out. Success! Another winner in the bank, baby! One of the great things about this strategy is we can keep pyramiding into positions as each fair value gap appears. Here's an example. Here we have a fair value gap which gives the entry signal. Now we can set up the trade just like before. Note in this instance, the market has already moved more than 1 R from our entry. This means we can go right ahead and set our profit target at 3 R from entry. Now we get yet another fair value gap. As the market is pushing up strongly, we will also take this signal as a new trade to go along with our existing trade. We set up this new trade using the same methodology as we have previously been using. As we move through, 2 things have happened here. Price has now moved above the 1 R level of the second trade, whilst narrowly missing the 3 R profit target of the first trade. Also, the moving average has moved about the original stop level of the first trade, so we will now revert to using the moving average as a trailing stop for the first trade. As price reached that 1 R level, we will bring in a new profit target for the second trade at 3 times the original stop. Now, let's see what happens. The first profit target has been hit, which only leaves us with the second position. Let's see how it did. Here, the moving average has gone above the original stop of the second position, so we will now revert to using the moving average as our new trailing stop. Let's play the trade through to the end. Oh, yes, baby! Another winner! Now let's look at a short setup. Here we have a fair value gap to the downside. We set up the shorts in the same way as the longs by marking off the 1 R risk move to the downside and waiting to see which level price reaches first. Here we reached the downside 1 R risk level, so we now make our profit target at 3 times the distance of the original stop from the entry. The moving average is way above the stop level, so we'll keep using our original stop. Now let's see the trade play through. Bullseye! Now let's watch as this strategy puts together an incredible run of profitable trades by pyramiding into positions as each new fair value gap appears. It really is a joy to pile these trades up when the market allows us to do so. It really takes advantage of strong momentum. And there you have it. A bunch of winners in the bank. So that's it for this strategy. Let me know what you think in the comments. Also, don't forget to like and subscribe and help a gal out. Thank you, sweetheart. XX.